What's up, legends? Coming to you with an out of schedule Bitcoin update. Had some pretty major things happen last night, so I just want to give you an update going into the weekend, talk about what happened, why it happened, and then what to be careful of for this weekend. So let's get right into this. I want to try and smash this out with as minimal editing as possible. You guys know the deal. Like, subscribe, comment, all that sort of stuff. If you like what you hear in this video, if you learn just one thing, then just return the favor with a like and subscribe to help this video get around to more people so that we can educate people the right way to trade. Now, last night, as we know, it was the end of the week news plays after a week of basically a bunch of news plays. Once that happened, the NASDAQ here in the center broke out to the upside after a very quick fake move down. This here was fantastic for Bitcoin and it helped Bitcoin break to the upside as well. However, it didn't come without manipulation. So just having a very quick overall look here, this here is the manipulation that I was talking about on Bitcoin, that very big stop hunt there. You can see as I scroll over it, it lines up with the NASDAQ pumping to the upside. This was 100% a manipulative move done by the market maker, and I'm going to show that to you in this video. We do also have the Dixie over here on the bottom right, taking a bit of a dive. That is good for the markets in general. However, we're going into a weekend, so we really need to be cautious over the next couple of days. And Ethereum struggled big time. We're also going to get into why Ethereum is struggling so much compared to Bitcoin. So a lot to get out. I'm going to try and get this out as fast as possible. Let's talk about Bitcoin. This here was the stop hunt move that brought us back down into this range here where I had previously marked that we needed to stay above in order for the trapping volume formation to still be valid. This move here is where most retail opened up short positions, and you can see here within 30 minutes that candle had been fully recovered. In this period of time here, $360 million worth of shorts were opened and $360 million worth of shorts were also liquidated. Within 3 hours of that move, price had returned back to where it was sitting at the start of the day anyway. And in that moment in time, the market maker had liquidated $9 billion worth of short positions that opened their short positions too late. Never short falling knives. That's the lesson here. So why did all of this happen? Let's have a look at the higher time frame. So if you have been watching this channel for the last week, you would know that we were watching this formation as a trapping volume formation. And down here, this zone down here said must stay clear of this zone. A stop hunt into it is okay. That was at around 28,200. So price needed to stay above 28,200 with a candle close in order for this formation to still be valid. As I've explained on previous videos, this formation was trying to induce retail to take a position, preferably a short position. They kept rejecting EMAs. The yellow is the 200 on the 1 hour. It's also the same as the 50 on the 4 hour. And they kept rejecting those EMAs to encourage people to open short, as well as rejecting the range high at 30,700. Here is why we got the stop hunt. In this entire range, which spanned across almost 14 days, we now know, which we had already suspected, but now we know, the market maker's intention during this whole range was to induce retail to take a position, preferably a short position. The reason that they needed to do that was because they needed to build up the delta. Before this stop hunt happened, the delta to the shorts was only sitting at 6 billion and it wasn't growing for almost an entire 2 weeks. So how does the market maker increase that delta to the shorts so that they can then sharply reverse price using the liquidity from all of retail's stop losses and liquidation levels by reversing price the other way? You have to remember the market maker has 3 objectives. Objective number 1 is to induce retail to take a position. That was this constant rejection of the EMAs, constant rejection of the 30,700 level. The second objective is to create panic and fear and make you think irrationally. They do that by issuing a sharp move here. So a sharp move to the downside makes you think I better quickly open up a short position because this thing is going down to 20K, 12K, whatever. And then the third objective is to hit your stop losses and pocket your money. That happened when they then reversed it back to where it was before. So whilst we were sitting in this $6 billion range, why did the market maker not give us a higher low to break out to the upside and instead issued a stop hunt first? The answer is in the delta. Here, yesterday at 8:35 p.m., the delta, as you can see down here, was sitting only at 6 billion. So that was after 2 weeks sideways consolidation. They could not raise it beyond 6 billion. Once that drop had happened, however, that delta increased to 16 billion. That's a $10 billion increase in one candle. The market maker had achieved their goal. Now that retail had committed all of that liquidity, they were then free to sharply reverse the price. And that's what we see here. The market maker has kept these positions trapped even with yesterday's sell-off. There's a reason that the market maker did not come into this zone and release these traders here that took a short position after the last drop. These people here are still currently trapped. And the delta that we have to the shorts now on high block is at 9 billion. That could be those short traders that are trapped in that area that I just showed you. You can see here on this that with the sharp reversal of price, all of these people who shorted too late have been liquidated. It's all cleared out here, but the short traders with liquidations up here at this point in time are still safe. Is the market maker going to come for these guys next? So having a look at the chart and where we are right now, these are some levels I marked out previously based on trading light. And we had long positions at 28,900, 28,800, and then a pretty big buy block, you could say, between 28.7 down to 28.4, and then a final kind of lucky dip order at 28.3. So really from 28.3 to 28.9, there is a stack of buy orders. You can see that we have wicked into the 28.9 already, which is causing this little reversal. Now, if this candle closes as a bullish engulfing, that is a reversal pattern. It is technically a higher low from this drop here. The problem that we have is that it's now Friday, and Friday is false move Friday, designed to trap you into the weekend sideways consolidation. The only way you would take a position today is if you believed you could get a low enough entry. If you wanted it to be a long position, you believed you could get a low enough entry with a decent enough stop loss that even if you held through a whole weekend, it would continue the way that you want it to continue into next week. Having a look at the 15-minute time frame, currently as I film this, we are in the Asian session, and I would say that this low here is the low of the day that has just been set, and now price is on its way up to set the high of the day. Currently it sits at these candles here, but you need to wait till the end of the Asian session to see if they extend that high. Then the problem is this with Fridays. Fridays usually go like this. The market maker will issue an aggressive move and then pull back against that move to trap you over the weekend. The way that it plays out is we have a false move beginning London session. So that's in a few hours from now, after Asia has set the high and the low of the day. From that point on, London will usually just run a trend. So you might get a somewhere between 3 to 6 hour scalp trend at best. And then if you can pick that trend right, usually towards the end of the London session, they make one more extension, but that extension is a false move. So let's just say, to give you an example of what that visually looks like, let's just say this price action here returns to the high of the day by Asian session end, and then London starts and issues a false move. Maybe the false move will be to the downside. Then they run a trend. Maybe they'll run a trend to the upside. Towards the end of the London session, they'll issue an extension, and then they pull back before the session ends. At that point, they go into consolidation throughout the session changeover, and then it's up to US. Sometimes US can run the trend in the same direction and then put you into a trap move, or sometimes the US can reverse the trend and then put you into a weekend trap move. At the end of the day, whichever one US does, whether it's to the upside or the downside, it usually ends with a weekend trap move. So the point that I'm trying to make here is that when London session starts in a few hours time, look out for that false move start of session. And guys, if you want the session times that you can see on the background of my chart here so that you don't have to convert times or anything like that, it's always automatically correct no matter what part of the world you live in. Just go to the indicators here, type in market maker and look for this one, session times by trade travel chill. You can add that onto your trading view, and then wherever you are in the world, you know the session session time changeovers. This green one that we're in now is Asia. Then it goes to this yellowy color here, which will be UK. The red is the US, and then the gray area is the dead gap zone where basically no one's trading. And then when it goes just to your normal background, that's into the weekend. So this here is the weekend. It doesn't shade the background for the weekends. So this is what I would be looking out for if I wanted to trade today, is for a false move UK session beginning. After the false move, look for the UK to run a trend for a few hours. Now that trend could be to the downside. I'm not saying it's going to be to the upside. It could literally look like this, but in reverse to the downside. So look for that trend. You're going to have to look for it on smaller time frames, 15 minute, 5 minute. It's going to be a 1 day scalp. Wait for the extension towards the end of the session, and then you may get trapped into some consolidation at the US changeover. You can either take your profit there and just be done for the weekend, or you can wait and see what US does. But US usually comes with a lot of volatility. You can see it here. So I would be careful. I don't really love trading the US session myself. If I could get a nice day trade that does something like this before US session open, I'll probably just take that and then go and enjoy my weekend, to be honest with you. But yeah, I just wanted to put this video out there, show you what to look out for today, out of the usual video schedule, because we had that big move last night. Now, in addition to that, I did see a lot of comments on my TikTok that Ethereum is really struggling. Ethereum didn't have the same situation as Bitcoin because Ethereum broke the range that it needed to hold. As you can see here, the exact same area must stay clear of this zone. A stop hunt is okay. It didn't stay clear of this zone. It completely broke down. And the reason for that is the Bitcoin dominance right now. Bitcoin dominance is absolutely flying. So just a heads up, it's up to you how you trade. But for me personally, whilst the Bitcoin dominance is doing this and making its way back to this area of interest, my eyes are only on Bitcoin. Now, I always trade Bitcoin and Ethereum together, but I'm not even going to bother with Ethereum until this is over. And the reason for that is because I'm not interested in shorting from where price is right now. I'm only looking for market reversals. And if this dominance keeps rising, Ethereum is likely to keep bleeding along with all of the other alts. So until the dominance gets up into somewhere around this range and then starts to reject, that's when my interest in alts will come back. But for now, there's enough money to be made in Bitcoin alone, in my opinion. So that's it, guys. Hope that was helpful. Please be safe over the weekend. Be prepared for a weekend trap where price goes sideways and does absolutely nothing, but doesn't mean that there's not an opportunity to trade today. Just be careful of trying to hold any good trade decisions through a weekend. Have the most amazing weekend. I will see you Tuesday.